Small. We know with the Fed they are data dependent, but they're also market dependent. So yes, if the market has a bit of turmoil like we saw last week potentially, but I would say no. I think this is a good position for Trump, a bit of distraction. I think built into markets is this idea that we're on the way to a 15% corporation tax in the US, and therefore this investigation is unnerving people that path could not come about at all. So that's the main event. But no, I think when it comes to the Fed, markets look sensible. Today is a risk-on day. Futures are up in the US, so we're recovering from that mini bout of volatility last week quite quickly.
What was the cause of that mini bout of volatility last week? It does seem that the market is drawing a connection between rising political risk in the US and dampened activity on the risk trade.
So I think the main reason is, as I said before, embedded into the high valuations in the US market is a fair bit of hope. A fair bit of hope that we're going to see some of this overseas cash, famously Apple, of course, and other tech groups in particular, and the high multiple may be associated with a very low corporation tax going forward. It's currently at 35. I think the average S&P 500 company pays about 27, 28. So the idea is going down to 15 is very attractive for US markets, and any idea that path is delayed one or never going to happen, that is the concern.
So,
but
Alan, if you look at the pricing of equity markets versus dollar index, does it feel as though there is a mispricing? For instance, a lot of investors are staying around this optimistic theme that earnings will still hold up. You get corporate tax with a little bit of a setback, but the dollar index seems to be taking some of this off the table. If you look at the retreat you've had pretty much this year, it's been one direction south.
Yeah.
Is it a coiled spring? If there's good news, does it bounce to the upside?
I think the dollar's something separate. I think if you when you might remember when Trump said, "Let's make America great again," we had a meeting on that. What does this mean? Well, actually, surely it means a weaker dollar, because "make America great again" means making Ohio great again, right? The Midwest, and a weaker dollar. So that made sense to us. And people put too much emphasis on interest rate differentials. So the big story was US rates going up. You've got to buy the dollar. It's weak. Huge current account surpluses in Europe, in particular Germany, as we know. Sterling recovering, we're positive on sterling, we're buyers of sterling from low levels. And emerging market FX, notwithstanding what we saw in Brazil last week, emerging market FX coming back after a long period of weakness. So for us, the dollar story is a market story where participants put too much emphasis on interest rate differentials previously. So that's that. Earnings are coming through. There's no doubt about it. First quarter earnings, we saw them very strong. And the good news is that the long wait for European earnings has really come through. So for example, this year we're looking at earnings in Europe at about 15 versus the US at about 10.